Hello, I'm Rachel Jones for Kalkine TV, and now for some breaking news. At its meeting today, the RBA decided to increase the cash rate target by 50 basis points to 2.35%. It also increased the interest rate on exchange settlement balances by 50 basis points to 2.25%. The board is committed to returning inflation to the 2 to 3% range over time. It's seeking to do this while keeping the economy on an even keel. The path to achieving this balance is a narrow one and clouded in uncertainty, not least because of global developments. The outlook for global economic growth has deteriorated due to pressures on real incomes from high inflation, the tightening of monetary policy in most countries, Russia's invasion of Ukraine, and the COVID containment measures and other policy challenges in China. Inflation in Australia is the highest it's been since the early 1990s, and it's expected to increase further over the months ahead. Global factors explain much of the increase in inflation, but domestic factors are also playing a role. There are widespread upward pressures on prices from strong demand, a tight labour market, and capacity constraints in some sectors of the economy. An important source of uncertainty continues to be the behaviour of household spending. Higher inflation and higher interest rates are putting pressure on household budgets, with the full effects of higher interest rates yet to be felt in mortgage payments. Consumer confidence has also fallen and housing prices are declining in most markets after the earlier large increases. Working in the other direction, people are finding jobs, gaining more hours of work and receiving higher wages. Many households have also built up large financial buffers, and the saving rate remains higher than it was before the pandemic. The further increase in interest rates today will help bring inflation back to target and create a more sustainable balance of demand and supply in the Australian economy. The board expects to increase interest rates further over the months ahead, but it's not on a preset path. The size and timing of future interest rate increases will be guided by the incoming data and the board's assessment of the outlook for inflation and the labour market. The board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. That's all from me for now. Stay tuned to Kalkine TV for all the news that matters.